Mortgage rates explode. Is the Florida housing market doomed? Today, we're going to do a deep dive analysis. We're going to crunch the numbers that exist in January in the Orlando, Kissimmee, Sanford metro. We're going to analyze the data so that you know exactly what's happening and can make the best decisions for yourself, for your family, and for your financial bottom line if this is an area in which you want to live or if you're thinking about selling. So please stick around until the end so that you know what those changes are. Now, before I get too far into this, I need to address the elephant in the room, which is that mortgage interest rates have exploded. And I think it's important that everyone understand how quickly the interest rate market can change. Because as of Wednesday of this week, the headline news is that mortgage demand recovered slightly despite rising interest rates, and total mortgage applications rose 7.4% for the week, and that applications to refinance a home loan jumped 9% week to week, but were 76% lower than the same week a year ago, which makes a lot of sense because the interest rate market back then was very, very different. And since Wednesday, and since the Fed spoke, the markets have reacted. And the stock market, which prices in change instantly, sold off tremendously. And as of the making of this video, it closed down today 500 points on the Dow, and I think the S&P closed down close to 2%. So the markets no likey inflation. The markets no likey the fact that the Fed is very likely to increase Fed funds rates in a big way. But housing is the last domino to fall, and home prices and home values are the tail that wags of the dog. And so buy negative economic news. It takes a long time for the pain of recession to be felt. And we're only in the first inning of this recession, despite what the Fed may lead you to believe. But let's get into it right now and see what the data shows for the Orlando, Kissimmee, Sanford housing markets. And to be clear, we're talking about the Central Florida area. We're talking about Lake, Seminole, Orange, and Osceola County. We're talking about the home of the mouse. We're talking about Disney World and surrounding area. But let's get into it right now because January 2023 numbers are out. And yes, I know we're in the beginning of March, but February numbers won't be revealed until the end of this month. And when they are, you can bet your sweet bippy that I'll be the first one to tell you exactly what's going on so that you know, so that you can go out there and advocate for yourself the right way and make the best decisions for yourself, for your family, and for your financial bottom line. But as of January 2023, closed sales are down 37%. That is a big drop in sales. And that trend has been repeated in every market that I've covered so far in Florida. Sales have fallen off a cliff, which does not mean that there is not demand, but it does mean that closed sales have dropped almost 40%. Cash sales are down 47.5%. Median sales price is up 6.4%. This is a market that is short on supply and heavy on demand. There are plenty of people from around the country and around the world that want to live in this metro. Now, if you are thinking about buying in this metro, although I don't personally cover this area, I would be happy to connect you with a professional which we know, like, and trust that can serve and support you at the highest level so that you get exactly what you want, irrespective of market conditions. But let's keep going. Average sales price in the Orlando, Kissimmee, Sanford metro up almost 11%. Double-digit appreciation in January. Now, most of the markets that I've covered so far have been single-digit growth. I expect that we're going to see single-digit growth in most of the markets that I cover, but this is an outlier. 10%, almost 11% is a big deal. So pain of recession is not being felt anywhere within this region from a homeowner perspective. And Florida homeowners are sitting on a tremendous amount of equity. And it's going to be very interesting to see how these January numbers reflect in the peak to trough map that I will show you next. But let's keep going. Dollar volume's down 30%, which makes a lot of sense given that closed sales are down 37%. Median percent of original list price received is down 4%. And we're seeing that trend in every market that I cover. In January 2022, you could expect to get 100% of original list price received. And now, well, that took a downtick of a few percentage points. Now you get 96%. But keep in mind, the intensity of the markets within this market are going to trade very differently. And if you price your home the right way with the right professional, I can guarantee you, you will get multiple offers which bid the price higher, and you'll very likely get more than 100%, which is why it's critical you work with the real estate professional who knows how to advocate the right way. But let's keep going. Median time to contract is up 310%. From 10 days in 2022 to 41 days in January 2023. 41 days is a return to normal. The days of getting your house under contract in 2 hours with multiple offers that bid the price higher and waive every contingency, those days are predominantly over for now. What does the future hold? Yet to be determined, but I can tell you, buyers have a lot more leverage. They've got a lot more negotiating power. They've got a lot more choices. But let's continue down this list to see what the supply looks like. Median time to sale is up 61% from 52 to 84 days. New pending sales are down 20%. New listings are down 18%. Pending inventory is down 20.6%. Active listings inventory up 133%. New listings are down 18.3%. That is a shortage of new listings. That is no bueno for the buyer who is looking to buy in this market. There are less homeowners that are interested in selling their homes. And I suspect that's got a lot to do with the fact they don't want to trade out of a 2, 3, 4% mortgage interest rate and trade up to something with a 7 handle on it. Nobody wants to trade into a higher mortgage payment. And to be clear, if you're working with the right real estate professional who knows how to negotiate the right way, chances are, depending on the circumstance, you may be able to negotiate a seller credit to buy down your interest rate from whatever the mortgage interest rate is at the time. But for now, new listings are down significantly to the tune of 18.3%. Pending inventory down 20.6%. Which brings us to active listings on the market. And active listings on the market is up 133%, which means there has been a massive uptick in months' supply of inventory. And that's exactly what we see, up 200%. There is a lot more inventory sitting on the market longer in this metro. January 2022, it was 0.7 months. January 2023, 2.1 months. And 2.1 months is still a seller's market, but it's a heck of a lot more buyer friendly than it was January of 2022, which brings us to the thing that everyone wants to know about: distressed sales, foreclosures, because those are certainly going to be the things that unhinge the market, that bring down the market. Well, let's see what January 2023 told us. And there's been a massive uptick in foreclosures in the Orlando, Kissimmee, Sanford market, right? It's up 57.1%. The sky is falling, right? Well, let's see. There were 11 foreclosures in this metro, up from 7. So although that percentage increase looks to be dramatic, and it certainly is a trend that's not your friend if you're in that market and you're in trouble, the truth is 11 foreclosures is a very small number and really isn't a blip on the radar screen as it relates to bringing down the market at this point. And to be clear, this is not what it's going to be forever, but it is what it is right now. Short sales, well, they're down 33.3%. From 3 to 2, which is a long way of getting to. Distressed sales are not an issue as of January 2023 in the Orlando, Kissimmee, Sanford metro. Which brings me to the thing that everybody wants to know about. They want to know what the peak to trough changes are in the Orlando area. So we're going to start in Lake County. And what you can see is a peak to trough increase of about $1,400. And you can see on the screen from January to June, It's all green, baby. This market is in fuego. And if you're a homeowner in this market, you're sitting on a ton of equity to the tune of almost 59% compared to 2019 and 72% compared to January 2018. These are massive jumps in homeowner equity. And I suspect the homeowners in this market are feeling pretty wealthy. They're feeling pretty insulated. They're feeling pretty secure. What does the future hold? Yet to be determined. But let's look a little bit further into this metro, which takes us to Orange County. And in Orange County, peak to trough, it's been an increase of $1,000, which again, January to June, and mostly single digit growth. But relative to pre-pandemic 2019, an increase of 50%. And relative to 2018, a massive jump of 61%. So as of January 2023, ain't nobody feeling any pain in Orange County, which brings us to the biggest county of the three that are in this metro of Orlando, Kissimmee, and Sanford, Osceola County. And the peak to trough increase in this market is $4,400 and change, 1.19%. And if you look from January to June, you see single digit appreciation across the board. And relative to pre-pandemic 2019 and 2018, massive increase in homeowner equity, 59% in 2019 and 71% in 2018, which tells me although mortgage interest rates have increased exponentially in the near term, the Orlando market is not feeling any of that pain of recession. They're still appreciating at single digit growth, and the housing market there is not doomed, at least as of January 2023. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with a friend, and check out my next video because I suspect you will love it a lot. And until next time,